I'm going to start this out. I'm going to look at XLI as we dive into this analysis. You should be seeing the XLI charts right now. And on the left side right over here, we're looking at the weekly chart of XLI. And on the right side here, we're looking at the daily chart of XLI. For those of you that are brand new to this and the first time seeing cycle analysis, on the bottom are those cycle brackets, those half moons. That is just a drawing tool that helps us understand the rhythmic motion or the heartbeat of the market. I'm going to blow up this weekly chart that you see here, and you can see the just outstanding rhythms that you see here in the market. On the bottom, telling us if it were ideal, there'd be a trough here and then a trough here. And sometimes the troughs come a little bit on either side of the ideal. That's based on the principle of variance. And you can see that this cycle here, there resolved itself in a positive fashion as it had a higher bottom and higher trough, higher peak. That says that the next rally is very likely to take out that level, and it did so. In this case, we had a break below the 78.6% that warned us that the next rally is not likely to get through the next 78.6%, but getting through it was about a 30% probability, and it did so as the industrial sector really started to get its footing. So you can see a positive cycle that almost threatened to break down, and then a resumption. Note in here the reversal scout as it came like positive momentum, negative momentum, and positive momentum that remains. Here's your extensions right over here, and you can see that we have a 127% here, 161.8% here. I have it projected to the lower one, but really it could be moving up into this level right over here to about $122 over the coming weeks. Now, why am I still bullish in here? Well, momentum is strong, as you can see right over there, based on our reversal scout. And then when I go over here to the daily chart, you can see the fantastic rhythmic motion. Again, this is the harmonic family that is the dominant and minor thirds. You can see there's a 1/3, 1/3, 1/3, 1/3, 1/3, and 1/3 about to make a low right over here. If this is about to make a low and momentum is positive, and the slim ribbon PO on the bottom is giving you these upward resumption signals, look how great those were. All of that says that this next rally right over here is likely to move to the upside. And there's the fib extensions from the daily chart there. There's that $122 number at the 61.8% fib extension. So I'm just going to look at the side by side right now so you can see this is the bullish case on the weekly right in here, where it's still rising in this cycle, fairly early in this cycle. These are the positive. Let me just grab that properly. These are the positive cycles right in here, as you see, ready to resume to the upside. Can you see why this is a high probability that the market, that this ETF, XLI, the industrials, will be moving to the upside again very soon? That is using cycle analysis, momentum conditions, support resistance, Fibonacci extensions, and the key way that we look at the markets to raise your odds of success, raise our odds of success, because we trade this, and that's what we want to do. We want to make you a better trader, an observer of the market messages that it sends to us, and of course, understanding this language, a language that we use very different from other analysts out there.